How's it going, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex, and we're going to be going over Alibaba stock and the best option plays that you should do to double your money. So Alibaba, as you made a few videos on it earlier, we thought it's a good buy around 140, and now we're sitting at $180 per share. Absolutely killing it in the market right now, up 6% yesterday and 2% up in the after hours. So the past week's doing pretty well, up 10% in the past week after a really long downtrend. So we're definitely on the road to recovery and we're on the right path. So Alibaba definitely has a lot of upside potential. And if we take a look at the all-time highs, 52-week highs, it hit $320 per share. So there is a huge opportunity to double your money just buying and holding simply Alibaba stock. But for people who want to play options, there's some strategies that you could do to at least double your money. So let's over to the options chain. And in order for this stock to play out, we want to give ourselves lots of time for it to recover. I think a year out would be pretty good. December 16, 2022. That's going to give you 14 months of expiration right here. So the premiums are going to be a little bit higher than you typically would with monthly options, but that's okay because we have over a year for the stock to recover. And if this stock goes to say $300 per share in a year, we're definitely going to be seeing these call options go to crazy high levels. So let's take a look actually at the options profit calculator. And we're going to be going into a long call. The underlying stock is going to be Baba, of course. So it's not taking into account the after hours pricing, but that's okay because we're doing a leap option. So it's going to be a lot of time. Let's head over to the December 20. Where is it actually? December 16, 2022 expiration date right here. And let's just do something simple like the at the money call option. We'll do 180 strike right here for $3,000. Take a calculate right here. So basically, if Alibaba goes back to its all-time highs of around $300 per share, you're essentially going to see a nice 300% return. That's very, very nice. You're basically tripling your money as long as it does that. So for people who want to play long-term leap options, $180 strike would be pretty good. But for people who don't have a lot of money, have smaller accounts, what you could do is do some spreads. You could either do a call debit spread or a put credit spread. For this example, we'll do a call debit spread. We're going to be doing the 190 and 185 strikes. So what you want to do is you want to go to the buy and call and buy the 185 strike and then sell the one above it, the 190 strike. So as you can see, it's going to be turning into a call debit spread. Total cost is only going to be $233. Now, how do we make money on this option strategy? Basically, Alibaba stock has to expire over $190 per share at December 16, 2022, and you will double your money. The stock only has to rise $10 for you to double your money. That's pretty insane, but you do have to wait a year. But overall, it's pretty worth it if you buy a few of these contracts, a few of these call debit spreads. Say you have $10,000, you can turn it into $20,000 in 1 year. That's definitely going to be a really good risk reward right there. And it's going to have a high chance of profit. As we can see here, they're on over 70%, which is pretty good. I do think that Alibaba is definitely going to recover at least by next year, December, which is giving you a lot of time. It only has to move $10 upwards for you to double your money, which is a very good strategy right here. So yeah, you could essentially double your money really good profit loss right here. If Alibaba goes under it, you will lose your money that you put into this contract. So only play with money that you're willing to risk. But this seems like a really high probability trade to double your money in a year. And it's definitely something that I will probably be looking forward to. And of course, if Alibaba happens to skyrocket before expiration, you can always sell your options before expiration. And so whenever you're opening up options contracts, you always want to know how to close it. So in the case of a call debit spread, we're buying to open. So in order to close the contract, you're going to be selling to close, which is basically the opposite of a call credit spread, which you sell to open and then buy to close. So you always want to keep that in mind. So if Alibaba say goes to say $300 way before expiration, the cost of the call debit spread is going to increase in value. Now, when we have a call debit spread, we want the premiums to increase in value because then we can sell out of it for a nice profit. And you can always exit the position whenever you want. You don't have to wait until the expiration date. And most of the time, you're actually going to close out of it way before the expiration date anyways, in case it goes in your favor. So that's about it for this video. Alibaba definitely has a lot of room to recover. So please leave a like if you like the video, comment down below, and of course subscribe if you're new to the channel. Helps out a lot. Thanks for watching.